Three big tech names in the news tonight: Google, Microsoft, and IBM. Three huge technology companies all reporting their latest quarterly earnings after the bell tonight with mixed results. The results are important given new concerns about slowing global economic growth and a sharp decline in the sales of personal computers this year. The reports set up a flurry of activity in after-hours trading as the direction of all three companies will impact countless other tech suppliers and component makers on Friday. And since IBM is the most heavily weighted stock in the Dow, investors will keep close watch on Big Blue shares tomorrow. Microsoft was the first of the big three to report this evening, and that's where we begin with Seema Moody at the NASDAQ. Seema?
Susie, a big day for tech. Let's run through the numbers. Microsoft first. A lot of concern around weakness in personal computer sales ahead of its earnings report, but the numbers are out and it beat the street by 4 cents on its bottom line. CEO Steve Ballmer said the bold bets we made on cloud services are paying off. The tech heavyweight also announced the current CFO, Peter Klein, will be leaving the company at the end of the year. It will name its new CFO in the next several weeks. Let's also take a look at Google. Shares are up after hours. The internet giant reporting an EPS of $11.58 versus a street estimate of $10.66. However, its quarterly revenue of $13.97 billion came in slightly shy of the $14.09 billion expected by the street. And lastly, Big Blue IBM, the diversified tech player that is many times seen as a good barometer of what to expect from the broader technology space, missed street expectations on its top and bottom line due to a decline in hardware and services sales. Its first quarter EPS came in at $3 a share versus a $3.05 estimate. Bespoke Investment Group says looking back over the last 10 years, IBM's one-day reaction to earnings has accurately predicted the direction of the S&P 500 over the following 5 weeks more than 75% of the time. And if that's the case, then tomorrow might be a down day. We are seeing IBM shares down after hours. Bill and Susie, back to you.
Seema, thank you very much. And joining us right now to talk about technology and where he thinks it's headed, Ashok Kumar is Senior Technology Analyst at Maxim Group. Welcome back.
Thank you.
All three that reported tonight missed on the top line. They were light on revenue. Does that worry you?
No, I think these are cyclical trends. In near term, I think the technology companies are faced with the macroeconomic climate, which is weak across the developed markets, and we're seeing consumer slowdown across key end segments, including PCs and smartphones. And the service side of the business, I think we are seeing hesitancy among the large corporate accounts. So it's more cyclical in nature than secular.
You know, this has been a tough time for technology companies, technology earnings, and there are so many changes happening in the technology space. And you see a company like Apple, once, the darling of the tech sector, now it's, kind of a broken company, so to speak. What is it, Ashok, that defines what makes a winner in the technology space versus an also-ran?
Absolutely. I mean, going back to the Apple story, I think the company's meteoric stock price rise from the mid 100s to its peak at $700, I think reflected a disruptive product cycle, both in terms of price and units. So the company came in and dominated the tablet market, came in and was a creator of significant value in the smartphone segment. And I think the company has been able to ride that cycle, but now, of course, it's on the other side of that mountain, so to speak. So about over $200 billion of market cap has been removed. And so the companies looking forward are best positioned, as you pointed out, in this undergoing transformation of the technology value chain, are positioned at the nexus or the intersection of consumer or cloud, the information, the mobility, and social media. So we think the three companies that should benefit longer term are 1, Google, 2, Amazon, and 3, IBM.
We keep hearing the migration to mobile. We all have tablets. We all have smartphones. What about the PC? Are we looking at the sunset years for the personal computer right now?
I think Bill, it's become primarily a replacement in a market. So in other words, the life cycle of the PC continues to get extended because of the lack of compelling applications that are being written for the PC platform. So the go-to platform are the post-PC devices, as Steve Jobs put it, the smartphones and the tablets. And that's where the application developer community is focused on.
You see a wide range of technology companies. So let me just get back to, which are the ones, the companies that you think have the platforms that are on the cutting edge, and maybe not any of the companies that we've been talking about tonight that reported earnings.
Absolutely, that's a very good point, because it seems that investors at the margin are focusing and voting with their dollars on disruptors. This could be companies like, Salesforce, it could be a company like Workday, it could be companies like Palo Alto Networks, and moving away from legacy companies like Dell, Hewlett-Packard, EMC, and to a lesser degree, Oracle.
And what about an IBM? I mean, so influential for years. They've made this transition into the services industry. They were cutting edge on that. What did you think of their earnings, and where do you think they're going from here?
Yeah, Bill, you raised a lot of key points on IBM. I think they were early to recognize the industry transition away from hardware to software and services in the 90s. So the company's portfolio, if you look at it from a longer-term perspective, it's very counter-cyclical. So they're able to ride the secular themes in software and services. They're in a position to grow the top and bottom line high single digits over a longer term. So I think, yes, there are some cyclical issues that are buffeting the near-term performance. But from a longer-term perspective, they're very well positioned to address their customer needs.
So this has been a big week for technology earnings, and a lot of people are wondering, what impact this is going to have on trading tomorrow. Do you think that this latest batch is going to influence stocks to the positive or the negative either way?
No, I think from a trading perspective, which is very near-term oriented, yes. But longer-term, I think technology sector creates tremendous amount of value across key end markets and segments. So it's global in theme, it's secular in theme. So I think these are cyclical factors that are impacting performance. But longer term, I think the value proposition in terms of risk return is very compelling on these key technology leaders in this sector.
Ashok Kumar of the Maxim Group, good to see you. Thank you for joining us.